Hey there, everybody. Thomas Wood with Basecamp Trading. It is Thursday, February 9th, and we're going to take a look at the setup that we talked about earlier in the trading room, and I sent out on Twitter and StockTwits. And that was a short setup, or actually it was a short or long setup on an intraday pennant on a 500 tick chart. But before we talk about the actual setup itself, you have to get the context that we're looking at the setup in, okay, or looking at the setup through. So first thing this morning, we come in and we look at all the longer time frame charts. Now, if you watched last night's members video at Basecamp Trading, we talked about, okay, bonds on the daily, we're flirting with resistance at 154, that if we cannot get through 154, we're going to expect them to come back down. Okay, so that's the first thing. Then we come in this morning and you look at where bonds are trading right in this area over here. We got to look at our momentum on our 30-minute price charts and our 60s and our 120s and our 240s. Well, 30s momentum is dying off pretty good. You go look at your 60s. At the same time, momentum is dying off on the 60s. So you have bearish momentum on the 30s and the 60s. You look at the 120s, same thing. Bearish momentum on the 120s. And the 240s were neutral. So now we know, okay, we're bearish on the longer time frames, unless we go and break through resistance, which obviously we're not doing right now. So that means if we have a bearish breakdown, we can expect a bigger move. Okay, we expect it to trend a little bit further. So then that takes you to, let's time our entry into the short. Well, here's the pennant I was talking about on the 500 tick chart. You can see we had a wide range and we had a narrower range. So you draw a trend line across the support and the resistance. And we know if it breaks the downside, based on what we saw in all the longer time frame charts, that we can expect it to continue to trend lower because the longer time frame momentum is bearish. Now, just so you know, the exact opposite went for the indices today. The indices, we came in first thing this morning and said, hey, all the indices are looking bullish longer term. So if we're looking for a bigger move, if we're going to trade long, we can look for bigger moves. But back to what I was saying with bonds. So off the rabbit trail. So here's your initial breakout, and we drop down very nicely. We break right through the support, and then we find some support right here at 152 and 16. Now, the interesting thing is, and I talked about this when it was breaking out, when we break out here, we've now shifted to a downtrend. We went from consolidation to a downtrend. Why is it a downtrend now? Because we put in a lower low and we have a lower high. Talking about pivots. Definition of a downtrend is lower highs and lower lows. If you need help understanding what the downtrend is, just look through the YouTube channel here. It should be the #1 viewed video on our YouTube channel talking about naked trading. It's about 45 minutes long. It'll teach you all about understanding trend definition. But continuing on, we break down, and then what we do is what's called a last kiss. A last kiss is once support has been broken, it then switches roles and becomes resistance for one test. So it bounces back up and retests previously broken support from the trend line, now is resistance. Now the way you trade a last kiss is you enter on the break of the previous bar's low after retesting the resistance. So that means you would have been selling right here. So your first entry is either right here on the trend line break with your stop above previous bar's high, or you're entering after the last kiss right here on a breakdown with your stop above the high, and then you continue to trend down lower highs, lower lows all the way throughout the day until right now it's 1:45 in the afternoon Eastern, and we have another lower high potentially forming, but the target's been hit. So why has the target been hit? One thing I talk about all the time is using the 240-minute price charts with value charts and value as our day trading target when we hit significantly undervalued or significantly overvalued. So historically speaking, the market only trades in the upper and lower red price bar segments, which are significantly over and undervalued, about 2.5% to 3% of the time. Okay, so when we get extended like that, that means, hey, time to take profits for the day. And you look back, you can see significantly undervalued, then reverse, overvalued, then retrace, overvalued, then retrace, undervalued, then consolidate, undervalued, then consolidate. The other day, yesterday, overvalued, then retrace. Well, today you hit lower red price bar segment, significantly undervalued, which means day trading target is hit. So if you're still following me on Twitter and StockTwits, I sent that out not 20 minutes ago saying, hey, time to take profits. But that is all I have for you for today. I hope it helps you understand a little bit more about what that setup was and why it worked out the way it did. I will see you in the trading room bright and early tomorrow morning. Don't forget, if you're not a member of the trading room, just go to basecamptrading.com/go, G-O. You can come and join the trading rooms for an entire month for $7. So that's it for now. See you in the trading room tomorrow. And until next time, happy trading.